Hello, Jamie Trull here, your favorite CPA and financial literacy coach. And today we're going to be talking about what seems to be the topic on everyone's mind these days, inflation. Now, more than likely, this has touched you in some way, shape, or form. I don't know anyone that this hasn't impacted in the United States right now because we are in a period of rising inflation. And this is the first time in about 40 years we've seen inflation to the rates that we have seen lately. Now, I've talked about inflation on this channel before in a little bit of a different context. Typically, I'm teaching small business owners. I actually had a Forbes article that I wrote all about surviving inflation for small business owners and tips for things that they could do to make sure that they could stay ahead of things. And I'd love for you to check out the video about that article and the article itself. But today we're going to be talking a little bit about something slightly different as it relates to inflation, and that's the role of big corporations. And I want to quickly draw the differential between what's going on with small businesses and what I'm seeing happening with a lot, not all, but a lot of big corporations with regards to how they are treating inflation. And honestly, it could not be any more different. And so I think it's really important that we talk about this. Now, real quick before we get into this, I want to say that inflation is a big thing. Right? It is not caused by one thing, even though we all love to point fingers at what we think the cause of inflation is. In truth, it is very nuanced, and there are a lot of different factors that are contributing to the situation that we're having right now. So economists, which I am not, hashtag not an economist, would have a lot of thoughts and theories about what it is. But I'm going to talk about what I know, which is numbers and finances. So for 10 years, I spent time in a Fortune 100 company, and my role in that company was within the financial reporting department, where I basically helped to craft the story that went out to our investors, i.e. the financial story of what happened with the business over the previous year or previous quarter. Right? And so I would sit down and look at what happened with our pricing, what happened with our volume, what happened with the different products that we sold or other products that we sold, right? What happened with our packaging? What has been going on with our delivery expenses? And I would write the story of here's ultimately what happened. Here's why our profit margins are higher or lower. Here's why our volume was higher or lower. Here's why our revenue or our earnings per share was higher or lower than expected, right? Or than the previous quarter. And so I totally understand how to read these financial reports. And I've seen a lot of things going around, some things flying around TikTok, right, about these big corporate profits. And so I decided to take a look myself because I wanted to see what role potentially, if any, additional corporate profits we're having in inflation. Because at the end of the day, right, what is inflation? Inflation is ultimately rising prices of goods for the most part, right? Goods and services, but ultimately it is typically driven by rising costs of goods and by rising costs of labor. Let's think about what that means if we are purchasing from these big corporations and we are seeing higher prices for the things that we are going to the grocery store and buying. Now, we can blame inflation, but of course, who sets the prices on those things? It's the corporations. So what we can do is go to the numbers and say, okay, is it truly inflation? Is it truly the fact that the cost of goods to these corporations is going up and therefore the price is going up ratably, right? That's what you would ultimately expect, is that typically corporations do pass on those price increases. So if the cost of the goods that they are purchasing in order to make the thing that they are producing go up, typically they will increase their prices by about the same thing in order to maintain their margins, right? So if the cost of goods go up by 2%, perhaps they would also increase their revenue, their price of their good by 2% in order to make up for that. This is something we see all the time with corporations. This is one of the reasons that taxes on corporations and on specific goods potentially for corporations are not always super effective, because of the fact that so often they end up passing them on to the consumers. Now, none of that should come as a surprise to us, because literally the corporations tell us that they're doing this within all of the things that they are releasing to their investors, right? All their public filings, their earnings reports, their 10Qs and 10Ks will tell us the story of what is happening. And so often it tells us that yes, we are passing on those higher prices to consumers. But is that the whole story? Are they truly just passing on the higher cost of the goods that they actually have to consumers? Or are they potentially taking advantage of an inflationary environment in order to pad their own profits? That's the question that I had. And so rather than assume that I knew the answer, right, I went to the numbers. And I will tell you that, of course, different companies are doing different things, but I do have a few examples that I wanted to show you that I thought were particularly interesting when it came to the discussion around inflation and corporations' roles in the rising cost of goods. So if you've never done it before, if you want to search up any company filing that is public out there, you can go to sec.gov and you're going to hit filings here. You're going to go to the search and access. And then I like to search here by the company or fund name, ticker symbol, etc. This will pull this up, and right there you can pick which one you want to see. So I'm going to look up Tyson Foods because I find that particularly interesting right now. That was one that I had researched and I thought had some interesting things that I wanted to show you. And you're going to be able to see their latest filings right here. You can see all the other filings over here. The 10Ks and 10Qs can be helpful, but they are a little dense. I will say, as someone who used to write them, they're a little dense. If you really want the summary of what's going on, you're going to go to an 8K, and specifically the 8K you want to go to is the one that's marked earnings release. So you can see here, this is their most recent earnings release. I'm going to click on this. This was May 9th, so this was probably their first quarter earnings release for the first quarter of 2022. And when I scroll down, I can see the description. So I'm going to hit that, and it's going to take me to their earnings release. And this is talking about the second quarter of 2022 versus the second quarter of 2021 and the first 6 months of 2022 versus the first 6 months of 2021. So you can see the comparison. Now, let's just do a quick comparison here of what's going on with Tyson Foods. Now, Tyson Foods is a massive, massive meat producer. So meats have been one of the areas where chicken and beef prices and things like that affect so many people. That has been something that we have seen across the board that has had a significant impact when it comes to inflation on grocery items for people. And so when we actually look into this, we can see that yes, their sales went up, but looking at just sales doesn't necessarily mean that their profits went up. So potentially, if this were an inflationary environment and truly they were only increasing cost that was commiserate with the increase in the cost of goods that they had, right? Then you would ultimately probably see a revenue increase because the prices they're charging are going up, right? But you would also see a corresponding similar cost of goods increase, and ultimately your operating income would end up being similar. Now, when we look at this, that's not exactly what we see. So you can see here that yes, we see some revenue increase, and yes, we see this operating income increase. And when we come down to net income attributable to Tyson, it has almost doubled from the first quarter of 2021. So let's dive in a little bit further here. What is really going on? So let's come down to where this talks about segment results. And segments are basically just the different portions of the business that they view their business in, right? So the different segments that they sell. In the case of Tyson, this is obviously beef and pork and chicken, etc. And so you can see what happened here. Now, let's just look at this really interestingly. You can see that from a volume perspective, volume actually went down. They sold a little bit less overall than what they previously sold. So volume is not what has contributed to this increase in revenue. What has been the reason that this revenue has increased so much? Well, that's the price changes. So you can see between the second quarter of 2022 and the second quarter of 2021, in just 1 year, they have increased beef prices by 24%. They are charging 24% more than what they were last year. Then we come down to chicken. That's about 15% more than they were last year. So you can see these are fairly significant changes. And the 6 months is even a little bit higher. It's 28% higher for the beef. Okay. Now, could this be just inflation? Possibly, but that would mean that beef prices that they are paying, right, are 28% higher. And therefore, they are passing along that cost increase to their consumers. Is that what's happening, though? So herein is where you can find the answer to this clue. I've come down to their consolidated statements of income. This is the P&L for Tyson for those quarters. So when we look and see this, we can see the cost of sales broken out here. And we can see that our previous cost of sales is about $10 billion. It's about 11.3 in Q2 of 2022. So when you actually compare the math on that, that's growth of about 11.5% in cost of goods. So yes, cost of goods did go up, but we can also see here that revenue went up as well by 14%. So revenue went up by more than cost of goods did, which means they increased their price more than just to account for the increased cost of goods. That means their profit margins got bigger. So at a time when they are charging significant amounts in addition to what previously was charged for these types of products in the marketplace, they are increasing them by sometimes 28% in terms of the price, right? They are actually growing in their profit margins. So not only are they passing that full amount on to you, the consumer, they are also adding additional onto it. And what I find so interesting about this is that if you look through the actual transcript of the earnings call that they do, so they do these earnings calls with investors and banks every single quarter when they release earnings. And when you look through the transcript of it, you see the word inflation or inflationary pressures 25 times. 25 times. So what is that saying? To me, it's saying that they are putting so much on it's inflation, it's inflation, it's inflation, but also pat us on the back because our operating income is actually higher and our profit margins increase during a time of heavy inflation, right? So they're trying to make it look like inflation is the bad guy when ultimately they're also trying to get credit for the fact that they have widened margins during a period of high inflation, which means that they're passing it on to the consumer. Now, if you want even more proof that that's exactly what is happening here, you can go look at these slides that they had for their investors. This is also available publicly. You can look through the slides from these earnings calls. And on their Q2 earnings call, this is one of the different graphs they showed. And what this is showing is ultimately the second quarter operating income, adjusted operating income for the company compared to the second quarter of 2022. So it's bridging from last year to this year. And so it's saying last year it was 739 million, okay? Then we lost 21 million. Ultimately volume didn't really have much of an impact. That's what this is basically showing, that the amount that was sold wasn't significantly higher or lower. It didn't have a huge impact on the results. So it's not that they just sold more, right? They're not up because they sold more last year. They are up largely because of what you can see here. Price and mix meaning the different types of things that they are selling, right? Price and mix are responsible for $1.9 billion of that increase. Now that's offset by $5 billion of cost increase. So again, this graph is showing you right in your face that cost only increased by $1.5 billion, but they increased price by almost $2 billion. And even in the headline to this chart, it says earnings increased due to effective actions to mitigate inflation and deliver productivity savings. Now, I don't really see a whole heck of a lot of productivity savings. I think what they're saying here is that because their selling, general, and administrative expenses went down, that's productivity savings. But we can see pretty clearly here that the reason that they are up in profit is because they passed on more of that price increase to consumers than they actually had. Now, does that mean that corporations are all the bad guys, the big bad evil corporations are fully responsible for inflation? No, again, there are so many things that are going on. However, I do believe that some corporations are using this as an excuse to raise their prices more than would be reasonable under inflation. And part of the reason that they can do that is, number one, because some of these are big companies that have monopolies, like Tyson does, around the industry that they serve, and there isn't a ton of competition that can come in and undercut with a lower price, right? So that is one of the big problems that we have. And we also know that we have widespread supply chain issues. And what happens when that happens is that we have more demand than we have supply. So when supply goes down, typically prices do go up. If we can get additional supply out there, right, then that can help to fix these inflationary pressures as well. And so all of these things are kind of working together in order to create what is happening. But corporations, some of them at least, are definitely part of the problem here. So when we add it all up and we see that each of these big corporations are adding even more onto those additional price hikes that they're getting. So for each different corporation down that chain, right, we are seeing potentially an increase of profit above and beyond that in order to pad these corporate profits. That means that it's the end consumer at the end of the day that bears the brunt of it. And that's what we're seeing in our grocery stores. That's what we are seeing when we are doing our shopping. That is something that we are running into when we are doing anything, trying to spend our dollars, we're realizing that our dollars don't go as far as they used to. And then there's frustration as well around wages. And what happens oftentimes with wages is that when we have pressure on wages to keep up, right? Because we can't afford what we used to be able to afford. And so then there's pressure on wages. Then we end up almost in this price wage self-perpetuating cycle where wages go up and then prices go up, and then wages have to go up and then prices have to go up until we find some sort of normalization somewhere. However, corporations can lead on this. They can lead on this. They don't have to pass all of this down to the end consumer. And as someone who teaches small business owners, I think it's really important to say, I want to bring this back to my small business owners, because some of you may be listening to this and thinking, well, this is why I don't want to increase my prices, because I don't want to put that burden on the end consumer. But the problem with that is then you as a small business owner become the one that gets squeezed out, right? You become the one that is the martyr for everybody else, and you are the one who is subject to these price increases by these big corporations, and yet you aren't passing it down to your consumer. So if you're running a restaurant and all of a sudden your beef prices went up 28% because that's what Tyson started to charge you, right? Then you're going to have to, in order to maintain and stay in business, increase your prices as well. Right? And that is a very tough thing. It puts a lot of burden on small business owners, and a lot of small business owners aren't going to make it through that. Either they're not going to increase those prices and then they're not going to have the margin to go to stay in business, or they are going to increase it and their volume is going to decline to the point where they can't stay in business, right? It's really putting a hurt on these very small businesses. And that's the frustration that I have with these large corporations that put this pressure that really impacts small businesses the most. And that is what I worry about in the coming potential economic recession. We will see what happens here, right? We don't have a crystal ball, we don't know. But I worry for the small businesses because they don't have the ability to change their prices in the same way that a larger corporation with a lot of purchasing power can do. And so that is why I believe it is so important for corporations to lead the way in ethical pricing and responsible pricing when things are difficult, in order to prevent us from going into this massive cycle of inflation that just can't be stopped. Okay, so there is my take. Again, there are many other things. This is not to say that there are not other things in economic policy and all of that is contributing to this. However, as a numbers person, I can actually see with my own eyes what is happening with some of the corporations out there that are taking advantage of this moment in time and using it to be able to pad their own profits. Thanks for coming. Thanks for watching. Again, if you have not joined my giveaway, I want you to go to jamietrull.com/giveaway. If you're watching this in the month of July 2022, we're giving away $1,000, okay? And all you have to do is do something kind for another small business, support another small business in some way. That is how you are going to be able to get your first 2 entries. And then you can get additional entries by doing things like subscribing to this channel or subscribing to our newsletter. So go to jamietrull.com/giveaway for the form to be able to enter. Again, we're going to give away $1,000 on August 1st, and it could be you.